Is the cryptocurrency world built entirely on speculation? And what about XRP? Is it just another speculative asset, or is there real value behind it? Today, we're breaking down one of the biggest debates in crypto, speculation versus utility. I'm going to show you why speculation isn't necessarily bad, why it can actually drive long-term value, and even point to some charts suggesting XRP may have already hit its bottom. If you thought you understood how XRP works, think again. Stay tuned because this video will change the way you see crypto investing forever. Is the cryptocurrency market driven by too much speculation? And more specifically, is XRP one of the biggest examples of that? That's exactly what we're diving into today. Speculation has always been painted as something negative when it comes to crypto assets, while utility is often described as the only thing that truly matters in the long run. But in this video, I want to challenge that idea. We're going to talk about whether speculation is actually a bad thing, what truly drives crypto prices, and we'll also take a look at some very interesting charts that suggest XRP may have already found its bottom. As I mentioned earlier, speculation is almost always treated as a negative force in crypto. People say if speculation is driving the price, then the asset doesn't have real value. But very few people actually stop and ask the most important question: what really determines the price of a cryptocurrency? You constantly hear things like you need more developers, more projects, more dApps, higher TVL, and more activity across the ecosystem. But the truth is, none of those things directly determine price on their own. Let me give you a simple example. Almost nobody is building on Dogecoin. Meanwhile, there is a lot of development happening on networks like Flare. Yet Dogecoin still has a significantly larger market cap than Flare. Flare also has much higher TVL, while Doge has almost none, and yet Doge is still worth more. So clearly it's not builders, it's not TVL, and it's not development alone that decides value. So what actually causes a token's price to reflect value? For years, people said it was innovation, utility, and building activity. And while those things do matter, they are really just secondary effects of something far more important. At the core of every market, crypto included, price is driven by one thing: demand versus supply. I could launch a brand new blockchain tomorrow with the best developers in the world. But if I'm constantly printing new tokens and inflation is running at 400%, demand will never outpace supply, and the token will never hold value. This is one of the biggest strengths of the XRP ledger. The total supply of XRP is fixed at 100 billion, and that number is actually decreasing over time as XRP is burned through network usage. That means the future supply of XRP is extremely predictable. It will never exceed 100 billion and will only go down. Compare that to many other networks with complicated tokenomics, inflation, emissions, buybacks, reissuance, and tokens being recycled back into circulation. It becomes almost impossible to understand the true value of what you're holding. Predictability matters. If I create a network with 10 tokens and you buy 5, but tomorrow I decide there are now 500 tokens, your share just lost massive value. That can't happen on the XRP ledger. And that simplicity is incredibly important for long-term value. But supply is only half the equation. Demand matters just as much. And this is where I think people misunderstand things the most. Demand doesn't come from one specific source. It's not just builders. It's not just DeFi. It's not just projects launching tokens. It's not even just speculation. Demand exists simply because people want to own the asset. And the reason they want to own it doesn't actually matter. Some argue that demand from utility is more valuable than demand from speculation. But that's not always true. If I buy XRP to hold it until it reaches $100, that XRP may be locked up far longer than someone who buys XRP just to use it briefly in a DeFi application. The longer XRP is held, the longer it stays off the market as supply. In that scenario, speculation can actually have a stronger impact on price. Look at Dogecoin again. Almost everyone buying Doge is speculating. Yet there are far more people speculating on Doge than participating in DeFi on many smaller projects. That's not good or bad. It's just reality. Speculation is not inherently negative. In fact, speculation makes up the vast majority of the equity market. That's how value is assigned to companies. Many people in crypto hate speculation because they believe utility is superior. I see it differently. Utility creates demand, but that demand almost always turns into speculation anyway. When something is useful, important, and scarce, people want to own it. That's human nature. Franklin Templeton explained this perfectly when they said that if the protocols of the internet had tickers, those tickers would be incomprehensibly valuable. The internet itself is impossible to value, but everyone knows how important it is. People would want to hold that ticker. They would want exposure to it. That's speculation, and that's not a bad thing. People love to say Bitcoin has no utility. Neither do Beanie Babies, yet they have value. Pokemon cards have value. Markets assign value to whatever people collectively decide is important, scarce, or meaningful. Utility, importance, and scarcity all come together to shape perception of value. If the internet could have an incomprehensibly high valuation, imagine what the internet of value could be worth. It's not about hitting some checklist of builders, DApps, or DeFi metrics. All of that simply influences how many people want to own the asset and how long they're willing to hold it. At the end of the day, only two things matter: demand and supply. It doesn't matter why demand exists. It doesn't matter why supply enters the market. If demand outweighs supply, price goes up. This is why I think people overcomplicate XRP. They say XRP needs this, XRP needs that. Maybe they're right, those things could help. But ultimately, XRP just needs more demand than supply. Now, some people look at ETFs and say, if that's true, why hasn't the price exploded yet? And as I've always said, ETFs will have a massive impact over time. But institutions knew these ETFs were coming. It's very possible they created additional supply early on to absorb that initial demand. We saw something similar after the Ripple SEC case ended. XRP didn't immediately explode, but once the supply was absorbed, it ripped. When you dig too deep into every layer of supply and demand, you end up with a lot of theories but no clear answers. The truth is simple. As XRP becomes larger, more successful, and more well-known, more people will want to own it, and fewer will want to sell it. That is speculation, and it's one of the strongest drivers of price. DeFi projects, new tokens, and network activity are important for growth and adoption. They help create a network effect. But in terms of direct price impact, someone buying 1 billion XRP and refusing to sell for years removes far more supply than most applications ever could. That doesn't mean builders aren't important. I want more builders. I want more innovation. But the idea that builders alone will push XRP's price higher just isn't supported by how markets actually work. Whether XRP is being held for speculation or locked up for utility, the outcome is similar: reduced supply. The longer people hold, the better it is for price. Now, looking at where XRP is today, we're still attempting to break out of a long-standing descending resistance. We've been testing this level repeatedly. I believe a breakout is coming. Hopefully this week we see a bullish market open. Some macro pressure appears to be easing, and that could help XRP finally push higher. If we get rejected again, so be it. But this resistance has been tested too many times. Eventually, it breaks. Fundamentally, XRP is stronger than it's ever been. And the final chart I want to touch on is particularly interesting. Many technical analysts, even those who don't normally focus on XRP, are pointing to extremely bullish signals. XRP has bounced off the 20-week moving average. Price is holding higher levels. Bollinger Bands appear to be tightening. We're seeing signs of extreme capitulation. Levels we haven't seen since events like FTX and Terra Luna. Yet the amount of fear in the market is nowhere near those levels. Whether the market was suppressed, manipulated, or simply disappointed by unmet expectations, it doesn't matter. Adoption is here. Fundamentals are stronger than ever. Now it's just a waiting game until supply is fully absorbed and demand takes over again. And as I've said the entire time, it doesn't matter where that demand comes from: speculation, ETFs, projects, or locked up XRP. In my view, demand is far too strong to be held back forever. Is the cryptocurrency world built entirely on speculation? And what about XRP? Is it just another speculative asset, or is there real value behind it? Today, we're breaking down one of the biggest debates in crypto, speculation versus utility. I'm going to show you why speculation isn't necessarily bad, why it can actually drive long-term value, and even point to some charts suggesting XRP may have already hit its bottom. If you thought you understood how XRP works, think again. Stay tuned because this video will change the way you see crypto investing forever. Disclaimer, this video is for informational and educational purposes only. It does not constitute financial investment or trading advice. Always do your own research and consult a professional before making any investment decisions.